The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the April 29th, wonderful Wednesday, Hour 2 edition of the Trader's Edge. I'm your host, Steve Rhodes, and I hope that you're off to a great start of your day. Let's make sure that you and I, we do everything we can to have a wonderful, extraordinary Wednesday. Of course, let's always remember, what's talked about is a dream. Hey, that's where it's got to start. What's envisioned gets exciting. That's where we get a little bit of momentum. Of course, what's planned becomes possible, but what's scheduled is real. And I want to really thank you for scheduling your time with me here this morning. I'm grateful for your presence here. I'm here to serve you. Feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can call us at 727-445-1044. Remember, if you've got a question, somebody else got that exact same question. And the question ought to be this morning, what's going on in the DAX? I see it's down 304 points. So we're going to go take a look at the DAX right off the bat. But, random act of kindness, that's the way to kickstart your day out here. This is Wonderful Wednesday, of course, none other than Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Let's go check out on the DAX out here. That's off 300 points. Is that giving us some kind of a message out here? We know one person that's celebrating. That is Maria in New York, who is short the DAX. She took half of her position off this morning. We can see the DAX is now trading it's trading right back. It's come right back to its breakout area. That's the day from March the 11th. It's slightly below that number, which really the breakout is going to be the day before. It's going to be either that day of March 11th or the day before, that little swing point out there from March the 10th. Nonetheless, she's got an A to B equals CD to the downside out here. That's what she was looking for. And if we take a look at that swing point, looks like it's April 10th. Let's see, 12,390. Yeah, so it's April 10th is going to be the A point. B point down here on April 17th, and your C point out here looks like on April 21st. 1-to-1 says price projection of 11,360,287. So that breakout area continues to be under attack out here. And he closed below 11,362. That says price moves down. Well, I'd have to say then you start bringing in to the potential, the rising price channel out here. If we take a look at this rising price channel, this is the one inside the DAX that takes you back into October of 2014 off of those lows out there. That is what's going on inside of the DAX. Now, let's go back to our markets out here. We've got the Dow off 70 points, S&P down 8, Composite off 17, Russell's off 7. FTSE is down 59 points. Gold's back $5. Silver's up a penny. Light sweet crude is up 20 cents right now. Hey, leading the charge the upside. You've got Micro Strategy. Must have a great strategy out here. Up $24, up 15%. Helen of Troy up 13%, up $10. Biogen up $8, $9. LogMeIn up $8. Carter Inc. up $6. Bluebird up $6. Starwood Hotel Group up $6. GoPro up $5. That's 11%. Buffalo Wild Wings. They are using their hot sauce this morning. Looks like their super hot sauce to the downside, off $25, down 14%. Looks like it has a little bit lower to go before it gets back to an area where it broke out. Wynn Resorts off $19, down 15%. Humana down $11. Stratasys off 18%, down $9. Ultimate Software apparently isn't that ultimate any longer. It's down about 5% off $9. BlackRock down $6, only about 2% out here. Nothing else low. We got Lumber Liquidators. That's down 17%. So we got a lot to look at. We go check out the individual stocks. But let's start off our day by taking a look at the ETF structure for the indices out here. We take a look at the Qs right now, volume of 6.5 million shares out here. The Qs have begun a new market profile today. Let's just simply use the old one from yesterday, which says that support ought to be around 109.07, somewhere right in that range out here. If that area fails, that says that price comes back and it tests the swing point here from April the 17th. as one of our possibilities. 46 million shares down there. Price is priced between 105.55 and 106.95 out here. What we know about the Qs is Alta a short. We'll take a look at that. If we take a look at what the Qs have done really for a second day in a row. Now, the Qs broke above their B point out here March 2nd. That had volume of 23 million shares. And the Qs broke above that and closed above it with a gap up. That's a wide-ranging bar, and did it with volume, 32 million shares versus 22 million shares, an extra 10 million. That's like 30% more volume. Makes a higher high with 32 million shares on April 27th. Pulls back yesterday with 36 million shares, but really it was pulling back and it was testing that swing point and closed back above it again with volume out here. Interesting. Now, if we take a look at the QQQ ETF series, and I put this on the weekly chart for you, somebody out there asked me, hey, what's that rising price channel, or that yellow line really? And if you take a look at the yellow line on my chart, that is the rising price channel that takes you back into 2009. So the top of that price channel is not, it's acting as resistance right now, but don't get too hung up like that is like major resistance out here, because it isn't. It's just the top of the current channel out here with regard to where price is bumping its head into it. Because I can tell you, long before that, the rising price channel would have been somewhere right around here. Let's take a look at this line. Let me see if I can get a red line out here. I got a red line. There we go. And the red line, oh, that didn't work. You got to actually grab the tool. The rising price channel. Oh, come on. Work with me here. Work with me here. There we go. There's the red line. At one point in time, this is what the top of that rising price channel probably looked like right there, as we pull it up. And you just simply have to be, the bottom is more secure. The bottom as a level of support and so forth, that's a more secure area for us, in my opinion. But we're a long way away from that inside of the Qs. So as we come back here to the daily chart, get back to our current daily cycle, what's going on, and it gets daily, versus looking at weekly is kind of an intra-day time period out here. Right now, I'm going to use this old profile, 109.07-ish as the range for some support out there inside of the Qs. Inside of the Russell 2000, IWM off 70 cents, down 4, with 4 million shares here this morning. The IWM is doing nothing more than consolidating with inside that TAS market profile box. It's a thing of beauty. We know 126.32 is a significant resistance level. Likewise, we'll see if 122.23 acts as a support level. No real information today as we speak right now. We're having an inside day inside of the IWM. Inside days say, and the inside day can't be over till the end of the day. But if we have an inside day at the end of the day, it actually says that the trend that prices came from continues. And that says that you'd go down and test the 122.23 area. That's the message of the IWM. If we take a look at the message of the SPYs, down a buck, with 21 million shares as we speak right now. What is the SPY doing? The SPY here, let's pull this back. I got lots of lines. I want to get rid of a few of them on my screen. At this stage here, we know the SPY tested February 25th, which only had, that's the swing point high, 73 million shares, was pushing higher with volume, 79 million shares. That's the way you like to see a swing point get tackled. That said that swing point was going to get tagged again, even though it was rejected. Well, it was tagged again yesterday, the bottom of the swing point, which was 211.22. Volume yesterday, 86 million, going into 73 million. What did that say? That said that level is going to get tested again. What level? At least the bottom, 211.22. What's been the high so far? 211.21. How about that? By 1 penny, one single penny. We're going to go ahead and give it clearance. We're going to say, hey, that's okay. So that area has been tested. Can't bust through it. If we see a negative response to the Fed minutes here, what you can expect is move down to about 207.62. That area gets broken, then you'll see a test of these lows from March 26th as well as March 11th out there. That's what's going on inside the SPY. If we take a look at the Dow Diamonds, inside the Dow Diamonds, they're headed down with about 1.3 million shares, 85 cents to the downside. Inside day here, not providing us with a ton of information. The swing point from March 2nd was hit. That had 3.2 million shares. It was tagged with 4.9. It was tagged with lighter volume, 3.8. 3.8 on April 16th. That was going against 3.2. No, it's been tagged a couple times with volume. Support inside of the Dow Diamonds looks like maybe 178.61 or a test of that swing point from April 17th down at 177.16 out there. That's what's going on inside of those 4 ETF structures for our indices. If we go take a look at, let's go look at some short-term charts out here. Short-term charts. For the ES Mini, let's take a look at the 30-minute chart. What's the message that we've got out here? Message that we've got out here is that as we came into the open, get my cursor out here, came into the open between 9:30 and 10. We had that nice little bullish engulfing morning star type pattern out here that says support should be the low here at 2,095 and a quarter out here. That should be support. If that fails, we start moving down into the 6th of 7 potential legs to the downside, where this market has used those 7 legs, 6 legs, and 5 leg patterns to the downside as really good turning points out here. Message inside of the ES Mini right now is we know where the bulls are hanging out. So that's a cool thing. It's always a cool thing. And the next place where that level fails, where the bulls are hanging out, it was at yesterday morning's low as we came into that 10:30 session out here. So those become your levels of support. That is the message of the markets on the 30-minute chart. Let's for the ES Mini, let's look at the NASDAQ, the NQ out here. As we take a look at its message, it's got support at 44.83. That's its TAS market profile low. We know that the setup on this, because that point of control, that light blue line, that 45.19 area, was closer in distance to the resistance level at 45.31. That said, sellers had control during this 30-minute segment, in essence, that we're in here. Price has now gone down. It's tested that level. That's support. Key area to be watching for support inside of the NQ on a 30-minute chart, 44.80. We'll call it 44.83. Steve Rhodes with TFNN. Be right back. Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host of TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 91. S&P is down 11. Composites up 26 points as we speak right now. I had a question inside the Tiger's Den earlier. If I would take a look at Ulta Salon, ULTA. If you've ever been in one of those Ulta salons, I've been in there twice, I think. What an extraordinary place if you're into hair care products out there, shampoos. I didn't do the total shopping. I just walked in there actually one day just to get some shampoo and was so overwhelmed. There was too many choices. It was like I had no idea that there actually was that many products to actually choose from. So, of course, what do I know? Of course, we should have known that just simply by taking a look at Ulta Salon and, just taking a look at the success from a stock standpoint that it's got out there. So I don't know all that they've got in there. No, I did not go in for a facial or massage, just simply shampoo, baby. In any event here, we're going to take a look at Ulta. I'm going to do it on this chart right here. Because the question was, is this a short out here? So we're going to look at a couple of different tools. Now, and I've actually pulled this chart back just a bit here inside of Ulta Salon because I want to show you a pattern out here that I see as something that says, okay, let's pay attention to this and really just take a look at these TAS market profiles out here right now. And what we can see is that when the boxes continue to form up at higher levels out here, it just, to me, the message has been, as I take a look at this, that when it continues to make those higher level boxes, only if the bottom of the box, only if price breaks below that, does that become an area where you really want to short. Let's check out that theory. Let me see if I can do it like this. So if we come all the way back down here, back in 2013, prices looks like around the $75-ish area. Makes another box out here around April in 2013. Price never comes back and breaks. It just came back, and it was a higher level box that was formed out here, so still bullish. Another box gets formed. Price never breaks through the support level. But it does take place back here in May of 2013. Once price broke below that level of support out here, that said, okay, you had some kind of support. Now, you'd have to go back and take a look at volumes. Let's take a look at volumes out here. Let me add that to this chart. So we take a look at volume, and you take a look at retracements. In this case here, that's just out of curiosity. See what happened. Went from low to high out here. And the retracement came back, didn't make it all the way to the 0.618 level, but looks like between the 50% and the 0.618 level out there. Let's take a look at, let me pull this back. And so then all of a sudden, when resistance, okay, the top of that box gets broken, is that the time to close out your short? I'd have to say yes. Is that the time to maybe start thinking about going long? I'd have to say yes. So we could go through this and we can continue, but let's just fast forward to today. Just use that pattern back there because the pattern is pretty consistent. And what we can see here is coming off of this now, Alta Salon had a huge gap up, wide-ranging bar back on September 12, 2014 out there. Big wide-ranging bar, big, huge volume to the upside out here. And what we can now see is that price continues to make these higher-level boxes out here. Price has not come really back to a buster. It looks like one day, December 2nd, we saw it close just below the bottom of that support level. And the reason why I bring that up is because we just formed a new box here today. Well, yesterday, it looks like. So the answer is we saw Alta Salon gap up on March 13th. Nice volume out there. There was 4.5 million shares. That swing point has been tested, though. It's been tested with lighter volume and was tested with, 800,000 shares, 700,000 shares. But the answer is, I mean, if you're going to try to sell the top, I suppose you could do that. But you haven't seen a real breakdown. If you were to see a close below, here's the problem with Alta. If you see a close below 151.35, it's going to come back and test the support area. It's going to test the gap. And so I think you have limited downside opportunities out here, unless you know something ahead of time, because it could find some pretty good support at 145.90, 148.11 out here. And I don't know if the reward risk is there. At least if you had a break of the bottom of this box out here, 151.35, then you'd at least have, some, and then if volume was accelerating, then maybe. But it's got a pretty decent support line, and that is on. That's the way I take a look at it with regard to taking a look at Alta Salon on its daily chart out here. And is it extended? The answer is yeah, absolutely, it is, and it's extended. We took a look at the. Well, I'll tell you what. Let's do this. I'll come back to Alta Salon. When we come back from this break, we're going to go to Bob in Loveland, Colorado. We're going to take a look at gold with him. I don't know if that's Rand gold we're going to look at or just gold. But then we'll come back. We'll take a look at the extended pattern inside of Alta Salon on its weekly and its monthly chart out there. We'll be right back, folks.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the Future Economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 53. S&P is down 7. Composites off 20. We're going to go out to Loveland, Colorado, home of the Loveland Pass, and, of course, none other than the Continental Divide out there. We're going to be speaking with Bob. Bob, thanks for calling. Thanks for holding. How are you doing this morning?
Really good. How are you doing?
Excellent. Thanks so much for asking. You're interested in looking at, is it Rand Gold that you want to look at?
Yes, I am in it at 70-40, and I just wanted to get your opinion. I'm looking for an exit.
You are. You're looking for the exit doors out here already.
Yeah.
So 70-40, nice trade. Congrats on the trade out here. So let's take a look at it. What was your original target, if I can ask, when you got into the trade?
Oh yeah, is 79.19 coming right up on it.
Okay, great. All right. So let's take a look at, and the 79.19, folks, that he's looking at is going to be the swing point, or close to the swing point high from, well, you've got two swing points out here to take a look at. Really, the swing point I would be focused on is February 27th. That was the high of 80.21 and the low of 78.19. It closed at 79.19. So I see that's what you're looking at. Now, volume on that swing, Bob, was 508,000 shares, and you're moving into it with volume, or so it seems. We've only been trading for 2 hours. It's done nearly 200,000 shares, so you're coming into the swing point with volume. Is that the level where you're going to see 100% move of a move? I don't know the answer, to that. Would you consider, as far as managing the trade, do you have a stop? Have you been using any kind of trailing stop, or what's your stop management system that you're using?
Yeah, I have a stop fairly low.
You do? Okay.
I think it's like 67 something.
I'm going to walk over to on my different screen here to my position size calculator. That helps you to. That's really the whole one of the psychological edges in trading out here. But I'm going to take a look at Rand Gold just to tell you what its average daily trading range is, or has been over the last 10 days, and that's $1.68. So, because you're getting near your target, $1.68 would be the normal trading, just a normal movement on an average basis out here.
Right.
And so you could take a look at, number one, if your target was 79.19, it looks to me like it'll get there.
Yeah.
So, if you're good with that trade, and you've got another confirmed A to B equals CD to the upside yesterday, let's go see what that target was.
Okay.
And that is a little smaller A to B equals CD pattern. So if that comes to fruition, what we're going to use, our low down here from March 31st, our A point, our B point out here is going to be April 16th. And the low looks like it was probably April 22nd. This says 81.58 would be your 1-to-1 on that. So that is a possibility that that's what it's actually doing, because that swing from April 16th was taken out with volume yesterday. 872,000 shares were able to clear 764. So that being said, you could consider using some type of trailing stop that would be $1.68 or $1.68 times some type of Fibonacci expansion, 1.272 or 1.618. And what I would do is I would take that $1.68 and or some type of expansion of that, and I would just subtract that from the current high right now, 78.84. Okay. And then you have to go through the thought process of, is it worth the risk? Are you willing to give back $1.68 or something, around that area,
right?
Versus what happens when it gets to 79.19.
Yeah.
There's no sell signals or anything along those lines. If I go down to a super short-term chart, maybe like 30 minutes for you. Mm-hmm. And we were to take a look at something, there's not anything here. Let me see if I can figure out what it might be going against. I think I have to go back pretty far for that. I'm just not seeing any, darn it, I'm not seeing any real signals there. Right. But I understand the 79.19, no question about that. And,
okay.
What are your thoughts after that information, at least what I've shared so far, so we can kind of dissect that?
No, that's excellent, and you've kind of confirmed what I'm thinking. I just have to make the decision if, who knows when the Fed comes out, what's...
Okay. So you're thinking that this could be, impacted. So from that standpoint, if you want to be out now, I'll tell you on the monthly basis out here, the monthly basis at 82.07, that's some pretty strong resistance. That's just looking at the TAS market profiles out here. Let me see what the weekly shows up for you. There's no worse feeling than letting a good winning trade turn into a losing trade.
Yeah, that's right, boy.
Right? Because you can always get back in.
Yeah.
So you got to go through that emotional feeling.
Right.
What are you going to feel better about? Having taken a profit and, okay, if it goes higher, so what? You still made money?
Yeah.
Or are you going to feel, and you can feel good? Because some people can't feel good about that.
Yeah, that's right. Yeah.
Some people beat themselves up, even when good things happen. Even when they've made money, they still beat themselves up, and then this is the wrong game for that.
That's true.
So that's the best. I will tell you this much. If we take a look at gold, I'll throw one other thing out there for you, and maybe you heard it during the first hour. And gold has not. This is on the daily chart. Gold has not convinced me that it's yet broken out, and the reason is because it found resistance at that 12, 15, 20. So if you stay in the trade, you really want to see gold's response to the Fed get above 12, 15, 20. I mean, that would tell you that actually Randgold probably has a lot further to run to the upside.
Yeah, okay.
But if you want to take your profits now, hey, man, great trade. Yeah, great trade out there. Okay?
All right. Well, I thank you so much, Steve. That's very, very, very thorough.
Now, Bob, are you a native of Loveland or?
About 40 years.
Okay. Now, do you drive through the pass very often?
No, and actually, that's a lot of people misunderstand. Loveland is actually the Front Range.
Okay.
So about 50 miles north of Denver, basically.
Okay. And my apology for that. Well,
that's okay.
still begs the question: you ever drive through the Loveland Pass?
I only have once.
Really? Oh, okay.
I don't like those. Scary road.
Yeah. Well, it would be scary in the wintertime, that's for sure. Yeah, that is for sure. And you want to make sure you've got good brakes on the way down.
Oh, boy, yeah.
Absolutely. Hey, thanks so much for calling, Larry, and have a great day.
Hey, thank you much.
You bet.
Bye-bye.
Dow is off 44 points. S&P is down 6. And, If we look at other stocks out here, Gold Corp, to try to give us a clue as to what's going on, not a great clue out here because it's running into resistance. It's resistance 2003 to 2046. Earlier in the first hour, we were taking a look at the GDX for S&P and the Tigers Den. We gave that 1-to-1 price projection. That's been hit, so that's been attained. That was a $20.78 mark out there inside the GDX. Volume today, 11 million shares. Yesterday, 61 million shares. So volume's not too bad for an hour and 15 minutes worth of trading. But this has completed a pattern out here as well. We'll see if it's got more room to run to the upside of this shorter-term rising price channel out there. All right, so let's take a look at, we haven't really looked much at the individual stocks and what they have been doing. So if we take a look at, I don't think we looked at Buffalo Wild Wings. So let's go take a look at Buffalo Wild. Well, maybe we did, but we're going to do it again anyways. Yeah, we did. So Buffalo Wild Wings on its way down to levels of support, 153 and a quarter, 143.86, or 136.60. That looks like that is where that is headed to. Wynn Resorts out here, WYNN. This is a gap down this morning, fairly big volume. It had completed at 1-to-1 A to B equals CD out here recently. If we take a look at where this thing is headed to now, broke through that hammer candle back here, that hammer candle, which was an island reversal. Remember, nothing more bearish than a failed bullish pattern. And the island reversal inside of Wynn Resorts took place on December 17th. Wynn Resorts broke through the bottom of that island back here on March the 10th. Price came back up in essence to kind of test that area, but we can see the gap down. Should really not be unexpected by the mere fact that the most bullish pattern out there failed. So well in advance of the gap down this morning. Now, if we try to figure out where Wynn Resorts is headed to, we'd go to a weekly chart. I'll go to a weekly chart out here. Oof, that does not look good at all. Boy, that's been in a real descending price channel out here. Take a look at this. If you come off of its highs on the weekly chart out here, there is your, I'd have to say that's really your descending price channel out here. And now if we try to, price has made its way perhaps down to the bottom of that. Let me just try to pull this up. Whoops. Let me see if I can pull this up to the side. It's actually coming into potential area of support, which now when I say support, I'm not talking about like buyable necessarily support. I'm talking about, hey, maybe price just starts to gradually move sideways out here. If I pull this back really far, because you can really make the case that Wynn Resorts is going to head all the way back down to the July 2012 swing point, somewhere around $90 to $95.99. No wonder Elaine Wynn wanted to try to be able to, I think, was she trying to be able to sell more shares or something? I know she was trying to stay on the board, but got booted off here over the weekend. I believe it was. Ultimate Software Group. Let's take a look at that. I don't know all the facts surrounding that, so no reason to really even spend any more time on that. But if we take a look at the Ultimate Software Group, down $12, down 6%. Let's go see what this is doing. Gapping down here this morning. Volume behind the move, 235,000 shares. The sign of strength inside of Ultimate Software is down around a price level 147 to 158. So it looks like another $10 or so to the downside. 10 or more dollars to the downside is where this is headed to. If we take a look at Humana, HUM, down $10, down about 6% this morning, gapping down. Now this has got some. This is moving down into some areas of strength. Well, I did mention I would go back to Alta Salon. I'll do that in a moment. If we take a look at Humana, it's moving down into really what should be a decent area of support for this equity, which is right around 165 to 167. That had volume patterns 3.2, 2.7. So far today, 1.2. So if volume really does pick up, then you'd have to say Humana probably targeting the 156.54 level. Now back on Alta Salon. Where's my chart out here? This chart right here. Let's take a look at it. I'm going to put this to a monthly chart, and that's got Rand Gold on it. That was what was up there, but now we got to put up ULTA. Okay, this is kind of cool because this was incidental. I didn't actually mean to do this. Remember, during yesterday's 10 o'clock show, as price was moving down, one of my favorite patterns was setting up. And we take a look at actually Rand Gold on a monthly chart out here. That same pattern, that's where price moves either higher or lower, does it with less strength or weakness out here. And then, interestingly enough, when Rand Gold was making its high, this is the month of October in 2012, it was making a higher high, doing it with less relative strength out there, and it formed a nice little evening star. After that was a second evening star that had formed in about, looks like about 7-8 months out here. Great patterns that identify tops out there. Now, fast forward to Alta Salon. So those are going to be, this pattern here is a leading indicator. It's an advanced warning. It's going to happen way before any kind of TAS market profile breakdowns are going to occur out here. And if we take a look at Alta Salon, it is in the process of forming the same kind of pattern. The problem is there's no bearish reversal signal as we speak right now. So even if I take a look at monthly, well, I know that when I did the monthly count out here, the wave count to the upside here, I can do that pretty quickly for you. At least this is what Stevie comes up with. So, once it got to that fourth level, I see a nice little retracement there. That's where I'm going to start my recount out here. And by doing that, now you get down to the fifth level and you get a move down out here. So that is that's pretty solid. And then if we take a look at where we at currently then to the upside out here, you're only in potentially the second wave to the upside. So yeah, it's extended. And it's extended using Stevie's tool on the monthly basis out here, but no reversal signal. And markets will continue to go up until you see a reversal signal. This doesn't have earnings until June out here. Let's look at the weekly time frame. See if the weekly time frame gives us any other message out here with regard to Alta Salon. And if we take a look at it, it doesn't have at least Stevie's favorite pattern, which is it's moving higher, doing it with less relative strength out there. If anything, the relative strength is very strong, up at the 80.61 area. And a couple of times we've seen on a weekly basis a couple of shooting stars out here that have, we saw a little break of that last week. That should have held the support. It doesn't. It did not hold the support. But this says 145.28, 149.57 is pretty decent support out there. So that's what the, if you put the weekly and the monthly together with the daily, that's what I see as its message. That is ticker symbol ULTA. Now let's go take a look at some things that are moving to the upside out here. We'll have to save that for when we get back from this break. But MicroStrategy Inc. Announces its first quarter numbers out here, and this thing has taken off. It's broken above some swing points out here. This may be all-time highs. Looks like it is. Strong like bull stock. MicroStrategy. Sounds like a pretty good strategy to me. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 48, S&P's off 7. Russell's down about 6 points right now. The DAX getting just whacked down 330 points. I think it was down a bit lower half an hour, 20 minutes ago, 15 minutes ago. FTSE's off 55 points. Now, currency-wise, let's go take a look at what's going on currency-wise out here. Let's go back to our Euro-Japanese yen. Let's start off with that. Now, this is a weekly chart that we've got on our screen out here. In the weekly chart, you can see that little consolidation area that it has been in, which also happens to be the swing point on a weekly basis that began on March the 9th. Price is trying to get above that level, which would be strong out here. Now, it's running right into the bottom of the TAS market profile box out here. And that says that the resistance, 132.78, and the actual high today, 132.62. If price were to close inside there, that would be really strong. That would be strong enough to say that price then heads up to the next level, which is really the next set of swing points out here, which was from February 2015. Now, we're looking for clues out here. You know, does the market know something in advance of the Fed minutes that are coming out here? Right now, and if price was trading up around 133 right now, I'd say the answer is yes, it does. It would be signaling to us because the currency pairs are what are going to rule the world out here. Now, if we just look at the euro versus the U.S. dollar as well, that too is trying to really break out the break out of this trading range that it has been in. It is above. It's right now trading just slightly above its market profile low, which was $1.11 out there. Then he closed above $1.11, starts to get it back into bullish formation inside this box. Maybe you're not long, but it would also say don't be short out here, or it would say price would at least travel to the 112, 11-ish type area out here. That's what's going on as we take a look at the weekly time frames. Those are weekly charts that we looked at. Back to the daily out here. Fairly strong, but it's got to take out these areas of resistance. We won't really know. And so with regard to clues out here, It's not that I'm clueless. It's just that if the market was really going to sell off, these currency pairs would be failing, and not that they can't, but they would be failing, and they're not failing as we speak right now. So yeah, it's a piece of information out here. If we take a look at the VIX index, look for clues out here. You know, the best clue is the mere fact that where it's traveling at in relationship to the 50-day exponential moving average. The VIX is trading at 1358. It has to close above 1430 today in order to really move to the demolition derby side of the market. And if it does that, and it stays above the 50-day exponential moving average, you can expect some fairly decent, or we should anticipate fairly decent carnage in the markets. Summation indexes for all three of the indices that we follow, NYSE, Composite, and Dow, right now, they're presently below the zero line. This tool doesn't do us a darn good of good. You thought I was going to say something else, didn't you? Doesn't do us a darn bit of good until really the end of the day. But this does tell us that bears are in control of the market. We've seen some zigzagging inside the New York Stock Exchange. I like to use that as the better indicator as to what's going on inside the market. But at this stage here, it says the sellers are in control. So I got a currency pair, says buyers are basically should be in control. I've got the markets here, summation index, saying that the sellers are in control. You know what that says? That says even Steven, basically neutral as we speak right now. Let's not forget, we are in a trading range. We have been in a trading range since January 1st. There is no reason to believe that we are going to be in anything but a trading range. That means something for the bulls, sometimes during the day, sometimes for a few days, and something for the bears. And until we break out of that range, that's where we're at. So, folks, stay tuned, because our man Basil Chapman, he's going to be up next, and Larry Pesavento. Then we've got, well, we don't have Daryl Martin, but we've got David White, Tom O'Brien Show, and I'll see you back here tomorrow morning. Take care, folks.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 28th and May 5th that only subscribers to his opening call will gain access to. On April 28th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's Opening Call newsletter today on the front page of TFNN.com.
This is TFNN.